Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world. And welcome to Season 9. This is Season 9 of Crypto Hipster Podcast, and I hope you enjoy this for the journey of the season. And I have an amazing guest to kick off this show today. He is the co-founder of Glider. His name is Brian Huang. Brian, welcome to the show.
Thank you. Happy to be here.
I'm happy you're here. This is going to be good. And I love the plant in the background. So thanks for joining me. So I'm going to kick things off with the first question I asked everybody. And I got amazing answers. It's what is your background, and is it a logical background for what you're doing now?
It's a great question. My sort of trajectory to where I got to today really covers the gamut of traditional finance all the way now to the extreme of retail DeFi application. And so I started my career at a big bank on Wall Street, Morgan Stanley, a big one everyone knows. This is like what, 7, 8 years ago at this point. So not too long of a career, but it was what I like to describe as Wolf of Wall Street without the fun. So like scrap all the fun out and all the work, and that's what you had. I was trading bonds and I was picking up the phone and answering calls about like, what kind of price can I get for 200 million of this bond? Now we were trading massive size, which was cool, but I think I saw like, look, there's better ways to do this, and we can do this, via streaming or, literally just you can request a quote on a computer, right? You don't need to pick up a phone. And then there were a lot of, essentially we were middlemen, right? Like we were people who would charge fees and charge spread on these large trades that hedge funds would put on. And I was like, there's got to be a better process for this. And so I left the bank, joined a high frequency trading firm, which was far more technically advanced. We traded a little bit of crypto. It's a firm called XTX Markets. It's based in London. And then I took it a step further after that. I said, okay, look, I need to go full on crypto. I moved to a company called Anchorage Digital, which is a big institutional custodian in the US. That was my first full on crypto career role. And they hired me to build out their trading systems. It made a lot of sense given my background. They needed somebody to build out their trading interfaces for institutional clients, their trading APIs for market data streaming, order entry. And now here we are today, where I've gone even further down the deep end, purely DeFi, right? There's nothing centralized about Glider. And we are building a easy way for people to interact with DeFi primitives, whether it is trading, whether it is lending, whether it is rebalancing portfolios, reacting to news. These are all things that we make very, very simple at Glider. So yeah, I've really sort of covered the spectrum of like purely traditional finance to where we are today, which is what I think is really the future of finance as a whole.
Awesome. I interacted with Morgan Stanley one time, and I think it was 2018, 2017. I went to a special event for Tom Brokaw, and I met one of the board of directors. I think his name was Rayford. He was there. I was like, maybe one day, as an ICO advisor, I said, maybe one day you, me, and the Waffle King can sit down and talk about crypto. And he's like, that will never happen in your life. So, we'll see.
The funny thing is that they don't know what they don't know. And I think us in crypto, really believe that this is a better system. One, more democratic, two, more transparent. And so they're coming around to it. They'll have to. This is the new meta, and a lot has changed probably since you last spoke to him too. Everyone seems to be embracing it now.
Yeah, I agree. So Glider, I want to find out all about Glider, including your mission, your vision, your purpose, why, how, and how you make DeFi easy.
Yeah. So there's a couple ways to explain this. I feel like for the crypto natives, there are a really nice set of user prop like value adds for people. So we'll talk about that first. One, if you're used to crypto, you have to pay gas everywhere. So we cover everybody's gas. Two, you don't have to worry about bridging. We abstract all the chains away. In fact, we believe that users shouldn't even have to know what network they're on. It's not irrelevant. Three, we simplify the wallets and login experience too. And so we use a lot of providers for this, but you can log in with an email, you can on-ramp with Apple Pay, a debit card, bank transfer, things that you would find very normal in a Web2 application. And then for those of you who are crypto native as well, what we do essentially is we automate everything between your portfolios. So let's say you've got a portfolio of crypto, a portfolio of stable coins, and a portfolio of on-chain stocks. The magic of crypto is that we have programmable money. And so you can move between these portfolios seamlessly. If you want to sell your ETH at a certain price, turn it into stable coins, have those stable coins earn yield. Right now, that takes like 25 clicks at least, and probably more. And then you need a wallet extension, and you need to go to a different app. We simplify those processes not only for our users, like directly on our front end, but we can simplify those processes for anybody else's front end as well. So it's more of an orchestration that I think is going to be really, really important in the coming future. A lot of what you see in crypto today is um, sort of things that you can do in TradFi, right? If you think about trading terminals, if you think about trading mobile apps, those are great, but all that they are offering is swapping, and swapping you can do on Robinhood, right? And so how do you actually do things that you can't do with traditional finance products and do them in crypto? It now becomes about, okay, how can I use the programmability of finance to seamlessly move things, seamlessly earn the best yield, seamlessly allocate into the particular risk cycles that I like, react to the news, set any type of trigger. The bread and butter of Glider, and this is really the bread and butter, tip of the iceberg, is you can make any ETF. Any ETF of any token on any chain, you can put them into a basket and it can rebalance properly. That's usually the way we explain it to people who are newer to crypto. And the difference here is that there's no one between you and your assets. It's you holding your assets in a non-custodial wallet. So whereas there's, BlackRock and Vanguard and all these ETF issuers in TradFi, and they charge you a 50 basis point, 20 basis point fee, in DeFi, there doesn't have to be an issuer. Not only that, you can change the ETF, customize it to whatever you want. If you wanted to hold the S&P 490 or the S&P 10, you can do that, right? You don't need to hold all 500 assets. On top of that, and this is newer, once you hold all the underlying assets, you can lend everything out. So you can earn yield on, let's say you could lend on-chain Facebook stock or on-chain Apple stock. And you can do these things, right? Ondo has released on-chain stocks. They're working with Morpho to offer yield. So now if you own the underlying, you can actually earn and participate in the utility of the underlying, whether it's lending, whether it's like receiving dividends, whether it is participating in governance, meaning like if you wanted to vote in a board meeting for one of these companies. We truly believe that the wrapper of an ETF is dead. You don't need it in programmable finance. The convenience that you have in Glider is still the same convenience you have to buy one click on your Fidelity, Vanguard, Robinhood account. So yeah, those are sort of the two ways we explain it. The ETF side is everyone gets it. It's like, okay, like, wow, I might as well hold the underlying. I can earn more. And then for people who are in crypto, we've simplified the entire process of gas, bridging, signing, custody for these users.
So let me see. I get this completely clear.
Yeah.
I can create an ETF from my crypto portfolio, which is not too much, but enough to create a small ETF. And then I can lend out crypto to people who want to be my customers or clients.
So taking this a step back, you can create an ETF. So like, let's say I want to hold 50% Bitcoin, 25% ETH, and 25% Sol. You can create that very, very quickly into like 5 seconds in Glider. All right. And then you can deposit whatever you want into that, whether it's stable coins, whether it's from your bank accounts, whether it is from PayPal, literally anything. And what Glider will do is it will take whatever you deposited in and allocate it into that ETF that you just created. So 50% Bitcoin, 25% Sol, 25% ETH. And it could be anything, again, on-chain stocks, RWAs. It could even be stable coins in there too. Any on-chain asset. And then with those assets that you have, all right, so now you're holding Bitcoin, ETH, and Sol. You can choose to lend those out. And when you lend, you're earning, let's say, On Sol, you can earn 3%. ETH, you can earn 1%. Bitcoin, you can earn, I don't know, it depends on where you are, but sometimes 7%. And that's all done automatically. So you don't really need to know how it's happening. You just know that not only are you holding Bitcoin, you're earning 7% on top of your Bitcoin as well, which is really cool.
Got it. So I don't need to get a service provider regulatory license. You have it. It goes through your platform, so I don't have to worry about that.
It's fully non-custodial. So nothing here is no financial advice. Nothing here is a recommendation. But it's fully non-custodial. So the fact that there's nothing between you and your assets means that you can change this at any point of time. There's no recommendation here.
Got it. Okay, that sounds good to me. So there is. I'm just thinking. There's still a disconnect. I mean, 4 years ago we had a DeFi summer. We still haven't had another DeFi summer. I've been waiting for it to happen. I guess I've been waiting for a long time, or not. But there's still a disconnect in DeFi. So I want to find out what the biggest disconnection is, and how your approach not only differs from existing solutions but solves the disconnect.
So I'm sure you know, but just to get to the step of trying to participate in DeFi, meaning like going to Uniswap, let's say, you have like 50 steps before that. Like there's so many steps. Whether it is you make a Coinbase account, you get some crypto, you set up a MetaMask, you send your crypto to the MetaMask, you have to get a gas token. There's like way too many steps there, right? That whole process is broken. Not only that, you have this idea of like all of these wallets sit in a browser extension, and they pop up, they move between apps, but that is not the way that people think. That is not the way things should be done. And Coinbase has picked up on this, right? Like the base app itself is mobile. It doesn't have to sit in a browser extension. Like it can, but it's not the main entry point. So that's something that we focus a lot on. It's like, how can we make this as seamless as possible in terms of, all right, you come to a website, you don't even have to know it's really crypto. That is the goal, right? It is an investment platform for on-chain assets. You shouldn't have to know what is going on behind the scenes. It's not relevant to you. All you should know is that you can invest and you can earn either yields or diversify your portfolio across any assets that you see fit. And I make this point because it's like we're moving out of an era of like cryptocurrency gambling degeneracy into an era of like real on-chain like stocks, tokenized credits, real investments that have to move on chain. And so now the opportunity is to how do you open that up to traditional investors? You make it feel like something that they're familiar with, right? So a lot of what we do is trying to bring familiarity to crypto and hiding behind like or hiding away or abstracting away the gas, the bridging, the signing. We don't even have to mention that. Like it's not relevant to you. I mean, the other big blocker that everyone faces today is how do I get into the system? How do I convert my money at Chase or Bank of America into a stable coin? And I gotta say, we don't have the best solution for that, right? There are companies that have spent their whole career, MoonPay, Melds, OnRamper, all of these companies that have spent their whole journey trying to solve these problems. Coinbase is also doesn't have the best experience with that either. Um, and that's a real blocker. That's a real blocker for everyone trying to participate in crypto. It's how can we get normal dollars into stable coins? That's really the first step.
Yeah, I want to dive down that route. But you said, I used to think, okay, institutional is serious people, and all retail is degenerate. But what you're, but what you're saying is only a portion of retail is degenerate, and we're moving away. Another portion wants to be in it, and it's not degenerate, So how do you? I don't like. I'm on X a lot. I don't see a move away from the degeneracy. Like, how do we get like more retail in, and how do we, I think there's still great investments for degeneracy, like Solana is one of them, but how do you make that distinction, and how do you target the people who you think should, are serious?
Yeah. We spend a lot of time thinking about this. There's a couple of things that we like to think about. One, where is Glider in our life cycle of moving the dial from crypto native to normie friendly? Where are we in that? Because you have to build where users are today. And so we start with crypto native, they get it. Again, the value props, no gas, no signing, no bridging. And then we need to evaluate how we move towards that normie side, right? What are the audiences that we need to reach, whether it's through Instagram now or TikTok or through Reddit, right? These are places where uh, hasn't necessarily infiltrated, right? Crypto is very eccentric. So that's like one dial, but that's not the only dial. We need to also consider where society is on the spectrum from crypto native to normie as well, and sort of tee these up, right? Like they need to be aligned so that we are not too normie for where society is, and like it's not a match for our marketing, but um, or the other way, we're too crypto native and like the world doesn't get it. So that's something we constantly think about. There's a lot of avenues for marketing around that. It's something that we need to constantly feel like, where are we? Where are we and where is society? And then how can we change our marketing, our narrative? Are we doing, like we talked about recently in the team, like, should we do billboards? And I'm like, well, we're not there yet, right? Like there will be a time for billboards, but our audience today is not, Joe Blow on the street. It is somebody on crypto Twitter who gets it. And constantly sort of evaluating what that feel is important.
We had billboards. We actually had an FTX stadium, you
Yeah.
know, and when we blew up, everybody left.
Yeah.
So how are we getting people back that are still afraid because of the FTX implosion? We still remnants of that. How do we get those people to say, hey, Nate, it's safe now? How do you
Yeah.
like? Where
It,
do you?
it is it the biggest thing is about building trust and safety, right? We have a lot of really good tech these days where we can use, not to get into the weeds, but like account abstracted accounts, non-custodial things that really have, taken away the need for, like, you got to have a seed phrase on a piece of paper in your like safe, right? Like that world doesn't need to exist and shouldn't, right? We've got uh, if you're using Privy, for example, you're using, again, to get into the weeds, you're using like HSMs that are held in Google Clouds, like warehouses, data centers that are, if they're infiltrated, there's far worse things that are happening in the world. So, you don't need to be holding a piece of paper with your 26 words in a safe, right? Like we've moved past that. So that's one thing. The other thing that's really important here in terms of like how do you get people involved is you bring in assets that people actually want to hold. And that's not like peanut on Solana, right? Like you bring in like Tesla stock and you say, look, you can hold Tesla stock on chain. And not only can you hold it on chain, you can earn 3% by lending it on chain. And that's a better primitive than holding it in your broker. Of course, it's not going to like be instantly there, but it'll take time to get there. But because of the efficiencies of crypto and moving things on chain programmatically, the opportunity to earn is significantly higher. And I think it starts with stablecoins, right? And stablecoins today, you can earn easily 4%, 5%. It depends on how risky you want to go. You could get up to 25% if you wanted to. 7% is fairly normal. Coinbase today just released, 7% yield through Morpho on their centralized exchange. And so they're pushing a lot of this. That's where things start. And then I think people will realize, look, like once Ondo has already released on-chain stocks, right? We've got the super states of the world who are releasing, tokenized treasury bills. We have Plume, for example, who is issuing tokenized credit. These are, and then behind the scenes of this, right? It's BlackRock, Apollo, Blackstone. These are Franklin Templeton, Fidelity. These are real names. And at that point, it's hard to ignore because, again, these are names that people trust, and now they're doing it in a different way. But you as a retail investor shouldn't know the difference, right? You shouldn't feel any difference in terms of user experience. It should feel just like Fidelity. And behind the scenes, there's crypto rails that are helping you get more utility from your assets.
I agree. Yeah, that makes sense, and it makes sense as these big, slow moving institutions. I call them slow moving, but they're probably a little faster than
They're slow moving, so
that.
slowly.
Okay, I used to work at AIG, so I compare everything to AIG, and that was ultra slow. Um, you know, there's going to be tools that they got to put in the hands of retail, right? So, what do you see as some of these automated DeFi tools, and how are they going to change the way that these institutions interact with, the normies or the crypto native or people in between like me.
Yeah. Look, my role before this was at Anchorage, which is a big institutional custodian holding funds for the biggest VCs, hedge funds, asset managers, sovereign wealth funds, corporate clients like Visa as well. Like I've seen how slow institutions can move, that's for sure. Um, and I think what you see there is that they're starting to dip their toes into DeFi, starting to, which is a very, very good sign. The passing of the Genius Act recently and stablecoins has sort of tipped their head to like, okay, like, and Circle IPOing as well has been like, okay, how do we bring in stablecoins as a probably first a method of payment for merchants, right? That is probably the starting point here. Like Nike accepting stablecoins as a payment would be incredible. Coinbase already works with Shopify to accept USDC as a payment, and Coinbase is pushing that a ton. For these big institutional, let's call it wealth managers like Fidelity and Vanguard, um, it's going to be M&A season. And that's what we firmly believe. It's going to be acquisitions that can help them get on chain. We're already seeing it with Stripe, for example, right? Stripe has acquired Privy, they acquired Bridge. For those of you who don't know, Bridge is a way to on-ramp money from a bank account. Privy is a way to create a wallet through an email. And now they're launching a blockchain called Tempo. And so it's either innovate and keep up with the pace of Stripe, Robinhood, and Coinbase, or it's get left behind and slowly die a long death here. I think the younger generation too is a lot more keen to participate in crypto. I don't like the branding of crypto. I prefer to say on-chain assets because, again, cryptocurrencies are one thing, but there's a lot more happening soon. And so it's not going to happen overnight, but it's going to be a sort of a maybe even a generational shift to this is the way that you should be investing, and this is why, as opposed to like, oh my God, I'm moving all my assets from Fidelity to base app tomorrow on Coinbase. Like that's not the sort of movement here.
Yeah, I like the on terminology on chain. I like Web3. I like the different things, but I can't see myself calling myself the on chain hipster. I gotta keep it the way it is and go against the buck against the trend. Whatever it is.
Well, I think that goes to say like, again, where are we in terms of society, right? Like society still thinks of crypto as like, okay, you've got an audience for crypto, we have an audience for crypto, so we mention crypto all the time. There is a like negative connotation, I think, amongst like large amounts of people who've either gotten messed up by FTX or Terra Luna or all these things that you don't need to know it's crypto. If you go to Polymarket, for example, you don't even know you're using crypto most of the time, right? Like the best applications really abstracted away in a nice way. But yes, we're all in crypto. So
Awesome, awesome. So I want to talk about something not so interesting: the Genius Act. No, when I think of stable coins, I think stability. I think no speculation. I think boring. But I don't really consider. I say, what's going to happen to the cryptos that are or the assets that are used as payments, like Litecoin and XRP and all those? Are they going to go the Dodo way, or is there going to be a room for both, USD fiat stablecoins and crypto backed or crypto stablecoins? What do you see as the role of both in either one?
yeah, it's a great question. Not only that, how many stablecoins do we need? There's so many. We are talking about, thousands of stablecoins and also people who are building infrastructure to help people launch even more stablecoins. I think it starts to look a little bit like some form of like credit rating across stablecoins, meaning like how transparent are your reserves? Can we see them on chain or things like that? And then it's really the reason why the two stablecoins that have taken off, USDC and USDT Tether, the reason why they've taken off is because they are the most supported trading pair on the two biggest exchanges in the world. On Coinbase, it's USDC. You trade USDC Bitcoin, USDC ETH. That's why it's taken off. Same thing on Binance. Binance is USDT Bitcoin, USDT ETH. that is the go-to stablecoin on those platforms. So I think it's a hard time actually for people to come in and take market share. I think we're going to see regional pockets pop up where maybe it's a stablecoin for, I don't know, like the Mexican peso. That might be cool. But a lot of what people want to do with stablecoins though is getting out of their FX risk, right? And not holding the volatile assets in the peso is not the best example, but maybe like in Argentina, incredible inflation. They don't want to hold, the Argentinian, it's a dollar or peso, I don't know, but they want to hold stablecoins in USD. But then to answer your question, so there's stablecoins, and then there's the what we thought of would be ways to pay for things, Bitcoin, XRP, ETH, etc. Um, I don't know. I don't know. And I think what it starts to look like though is like for those of you who hold Bitcoin or XRP or Cardano or any of these, and you want to use them as a payment method, uh, it will automatically, when you use a card, convert whatever you're holding into perhaps it's a stable coin for the vendor to accept, but you won't have to think about it. And so I think that is part of the automation process too, that like needs to evolve. It's like, how do I spend whatever I have? And you can probably declare your preferences, right? Like, I want to spend my Cardano first. And it will seamlessly convert to stable coins so that you can go to a coffee shop and spend those stable coins and they can accept the stable coins there. So that's probably the process here because if you're a merchant, you probably don't want the volatility of holding 50 different tokens that people randomly gave you. You probably want to hold stable coins. And so somewhere in there, the conversion has to happen.
Got it. Yeah, I can picture, before we had the big four banks right now, we used to have all kinds of regional banks, and then we had M&A, and you said the M&A is coming. So
Yep.
that makes a lot of sense to me.
You're going to see the consolidation for sure. For sure. I mean, not only on like this, I think we could see it on the stablecoin side. I think you're going to see it on the wallet side as well. What these wallets look like, right? If you think about like Phantom and MetaMask, they've got millions of users and billions of assets. I wouldn't be surprised if they go out and they try to acquire the smaller wallets and take on their users as well. It looks very, very similar to like the consolidation of wealth management that happened like 10 years ago as well. Because why not, right? Like you've got users, your users have assets. Ultimately, we can make money from users holding assets. We should acquire you guys. So, yeah.
Yeah, that makes sense. Well, that looks like to me like an exciting time. So I want to find out from you personally, what excites you the most about where the DeFi infrastructure is headed?
Yeah, I mean, not to talk more about Glider, but like it's about the glue between all these primitives, right? We've got swapping, you can do it in a million places. You have lending, you can do it in a million different places. You've got wallets, million different wallets that you could use, right? It's now this question of like, how can I use programmable finance to its true capabilities, right? And these are new things for people to understand, right? Assets can move seamlessly. I'll give you a great example. If you have money in Robinhood and you want to get it to Coinbase, you have to go through like your usually a checking account, like a Chase or a Bank of America, and then you have to do everything manually, right? You have to say like, all right, move the money, probably takes a day, and then you have to say, okay, move the money there, probably takes another day. When with programmable finance, you can think about like, maybe it's Uniswap is the one app, and then I don't know, Morpho or some stable coins or the other side. You can do this instantly now, but you still need that orchestration. You still need something to actually do that for you in a really seamless way. And that is what Glider offers. It is an easy way to glide around and have everybody seamlessly have to, in a permissionless way, participate in all of these new primitives that exist. That's where things get interesting. And I don't think people have really caught on to that because it's not the way that systems work today. But once you realize that everything is permissionless and everything can move seamlessly based off of, hey, Jamil, I want to sell Solana when it hits 250, and when I sell it, I want it to earn yield. Like today, that again, that takes like 10 steps. It's not an easy process. You've got to connect your wallet to something that will support a limit order. Then you have to go to a lending protocol and basically move your assets into that lending protocol. It doesn't have to be that way. Like that's so siloed. that's the world we live in today with traditional finance. Why is it still like that? Like, again, I mean, this is something we preach all the time. It's like money wants to be freed, right? And the fact that money has to behave by these walled gardens of Robinhood and Coinbase today is not the way it has to be. Everyone should be able to participate in these on-chain primitives that are important for people to be able to grow their wealth, and not just gamble, to be very clear. Like this is about on-chain investing.
I completely agree with you. And I would love to have transparency. Like right now, I have some amount in the bank. I don't know how much I have because I paid some bills and stuff like that. And I want to buy crypto because actually I want to buy more. Why? Because they cut the race. The Fed announced the
Yeah.
rate cuts yesterday. So I'd love to be able, but I don't know how much money I can spend. So
It should be seamless, right? Like you should, and again, this sort of touches on where Glider goes, but like there are AI ways of doing this too, where like it understands what your risk profile is. It understands like, all right, like, hey, type into a bot like you do ChatGPT. I want to, you know, uh, dollar cost average into Bitcoin over the next 6 months, and it seamlessly happens, right? You don't need to be there to like, you know, check your checking account, check your Coinbase account, make sure it's happening, reconcile everything. It's all in one place too because it's all on chain and you have your account in your wallet and that's it. Yeah,
I love it. Sounds great to me. So I want to thank you very much for your time today. Really enjoyed learning about, talking to you and learning about gliders. So I have one last question. It's
yeah,
how can people find out more information about you and how can they become customers and clients of yours so they can start using your platform?
of course. So we're on all of the major channels. First, you can go to our website. It's glider.fi. We're on LinkedIn, we're on X, we are on TikTok a little bit. And then we have Telegram and Discord if you really want to get into the community and talk to people who are already using the platform. It's still very early for us. Glider is only a year old. We raised our first rounds 6 months ago. And so a lot is to come. A lot is to come. I'll tease that, but I think the vision is very much in place, and we've assembled the team to really put this together. So, yeah, check us out on socials. You can join our waitlist right now. We have over 200,000 people on the waitlist. We're giving out invites daily, thousands of them, and we'll be launching publicly very soon. And you should see some more of us in the news, hopefully, very soon as well.
Awesome. Awesome. Thank you very much for your time today.
Thanks, Jamil.